Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, August 1st, starting the month with a new sentiment. We are going to see why we are so much in the red today. But first, economic data. ISM manufacturing PMI for July came lower than expected, higher than the previous one, but Wall Street was expecting 46.8. We got 46.4. And jobs openings came lower than expected. Job quits came way lower than the previous one, and we are seeing a trend going lower on quits because I think people is not quitting as much as before. There are no as much openings as before, so the marketing is the job market is basically regulating itself and provided less opportunities for wage growth. That's one of the key outcomes of today's data. And ISM new orders came way higher than expected, better than the 45 and more than the 44 expected from Wall Street. That's one of the key things. Another thing is, remember that we are in a new week of earnings. Today we are going to talk about Uber and BP oil giant, and everything is ahead of tomorrow's PayPal and Shopify that will provide a lot of information regarding consumer spending. And also on Thursday after the close, Amazon and Apple, the big ones. We are going to start with all major BP post 70% drop in second quarter year-over-year profit and raises dividend by 10%. We all know that energy and crude oil is going lower, went lower, and that affected to not only BP but also other huge oil giants that saw basically their revenue got cut by almost between 50 and 70% this year. So BP in this case, compared with a profit of 4.96 in the first 3 months of the year and with the 8.5 billion in the second quarter of 2022, that was insane when crude oil went above $110 per barrel. Basically, they reported 2.6. So 70% year over year for the second quarter profit. And despite that, they raised the dividend 10% to 7.27 cents. You know that these companies want to buy back, so they also announced a 1.5 billion buyback program for the quarter. And you know the deal, right? You know how these businesses operate on manipulation of the market and also on the stock prices. So basically, BP went way lower. This is the 30-minute chart. On the 1-minute chart, we just got the earnings and it's now 1.13%. So let's take a quick look to the daily on crude oil because it's quite interesting. The big support zone around 70. All this structure that we got after the sell-off into May, then structure first breakout, second breakout into this W, and then we are at a critical pivot at 81.64. And this is going to impact not only upcoming earnings in 2023 for these oil giant companies, but also CPI. Remember that energy is a big percentage of prices on the CPI, and this will certainly affect upcoming readings after summer. So take that into consideration because I think year-over-year CPI bottomed out, and this kind of move on energy certainly will uptick higher on the CPI. Remember this when trading that number. Let's talk now about Uber. Uber shares drop after revenue miss despite first operating profit. But you know the deal, 9.23 versus 9.33 expected. Its revenue for the quarter was up 14%, but said during the quarterly meeting that basically they expect less bookings and a little bit of decrease in the outlook. So basically Uber wants big, remember we went in 2021 up here at 64 ahead of earnings. This year it was skyrocketing, but today 6% in the red, quite pullback. But let me tell you, this chart, it's looking pretty decent. So be careful with your investments, because the fall, if the outlook is pretty bad, we might see a bigger pullback. But right now above the 200 EMA, and only, let's take a quick look to that. So basically we are at 27% of all-time highs. It's not that bad, basically at this level from 2019. And that's for earnings. Remember that we are going to see tomorrow after the close PayPal and Shopify, a sneak peek of consumer spending, and then on Thursday after close, the big ones, Amazon and Apple. But let me tell you, earnings this season are not huge. The number of beats estimates is not that high. We are around 64%. In a bullish market is more than 72%. So be really careful with these kind of things, because expectations is everything in the market. And if earnings are not as expected, this is part of the reason why we are seeing this kind of pullback. This is the daily on the Nasdaq. We see a huge boost from January 2022 level, then pullback, and then we are for now doing a lower high. So remember the neckline, this is an M, a head and shoulders towards the downside. We need to see this kind of move. In order to see this kind of move, we have to see the break down of this pivot at 15,500 more or less. So this is the expected move if we continue as this, but let's analyze in detail the 30-minute chart first to see the context. This was Friday's move, yesterday's consolidation and choppy day, and then towards the overnight, we saw a big push to the downside. We broke this consolidation as support that we are now rejecting. Be careful with this. And we bounce off this level of Friday. So we are basically breaking down this white box balance sideways consolidation to the downside, but rejecting at the same time. So still tricky price action. If we see the 5-minute chart, we saw that spike to the downside, consolidation, another spike, and now trying to push higher. But let me tell you, everything is red. All the sector funds, all the banks, all the metals are red. Small caps, the only thing that are green are dollar and yields, and those are not good for the stock market. And Microsoft. Microsoft is basically pushing the market on news that it doubles down on generative AI, announcing Copilot final pricing and new generative AI skills. So you just have to name AI for Microsoft, Google, Nvidia to push. Meta is also pushing higher because of the partnership with Microsoft, but the rest is really showing signs of weakness. It's the only thing that still tries to push these markets up. But be really careful, because everything is looking a little bit more bearish than yesterday, and we are not seeing continuation from Friday. And we started seeing signs of strong bears pushing down. Other macro are pushing down. Gold is minus 1.45, clearly rejecting. Look at these two red candles, rejecting of 2000. Quite important level. Copper, Dr. Copper, huge red candle, minus 2.57. Remember that China has demand issues. This is affecting overall worldwide economy. Silver, minus 2%. We touch the fib retracement almost to the tick. We bounce, but we are doing lower highs. And this is not good. That coupled with the fact that crude oil is this high and natural gas, it's also trying to hold higher levels. I mean, I think a lot of people is starting to think about inflation not being under control and most probably seeing an uptick or higher, way higher than expected on the upcoming readings. Be careful with that because AI is not the solution to everything, but it's causing a lot of FOMO. Look at this. Microsoft pushing higher, Meta, new highs of day, Nasdaq is pushing higher because of that. That's basically the reading that I'm getting, the sentiment that I'm gathering from today. We saw a little bit of buyers down here, but again, choppy price action in the middle, and now just FOMO. Be careful with this tricky price action. We are seeing red across several markets, and just manage your risk because there's a lot of stuff happening this week. There's earnings, there's a lot of data also, economic data that it will be happening on Thursday and Friday. On Thursday, we have ISM services PMI, and on Friday, we have unemployment rate and NFP, non-farm payrolls. So if you, like me, think that this market is just moving on AI sentiment, but not following the rest of the market that is red, longs are quite difficult today. I think a lot of shorts in pre-market started positioning themselves, and we are out of this balance range, trying to come again in value in this range, but nothing is following. It's just AI hype again. Microsoft and Meta pushing the market. Be really careful with this. Apart from that, dollar is quite strong. I told you earlier, we are now at that fib retracement, but look at this. After this huge sell-off, we are more than 66% retraced. So be careful because dollar is stronger than I initially thought. We are crouching after this bottoming tail and this doji. Dollar is pushing. The stock market is also pushing. So yields in the green. Be careful with these rejections and the kind of risk that you take because there are divergences that I see in other markets that are not aligned with the kind of push that at least tech is trying to do. And that's all from my side. As always, if you found this video useful, please give it a like, subscribe to the channel. Thank you for your support, and I hope you enjoy my videos and my analysis. I upload videos every single day for market forecast, market updates, and market recaps. I hope you are having a good start of the month. There's plenty of opportunities for this week with earnings and more economic data towards the end of the week. So if you don't trust today's price action, I didn't. So I didn't take any trade today. I'm waiting to see real levels to be broken or held. And that's discipline, that's patience. And you have to also manage your risk to success in these markets. So take that into consideration. Stay safe, everyone, and see you tomorrow.